Thank you very much. We've got very little time actually for this session, and an enormous amount to cover. So I'm going to begin by saying a tiny bit about myself, and then I'm going to ask each of our panelists to introduce themselves. I am, as you've just heard, a specialist in financial services at Hogan Lovells, and I was delighted when I saw who was on the panel for this afternoon, because regulated lending and payments are my sort of special subject. So I feel an immediate affinity with everyone here. Let's get going though. I've got Jens, Catherine and Charlene, and could each of you just say a little bit about your business, and in that could you add in a brief explanation of why you are authorised in the UK? I know you're authorised in other places too, but why that's important if it is. Okay. Should we start with it?
Sure. My name is Jens. I'm Woloszczak. I'm the founder and CEO of Spotcap. Spotcap is a multinational FinTech company offering short-term loans to SMEs. We're operating in 5 jurisdictions, 3 in Europe and 2 in Asia Pacific. Are headquartered in Berlin, have entered the UK roughly 1 year back. Are growing very fast, operating very successfully, and we have obtained the FCA license, the full consumer credit license, already well before we entered the UK, because it's very important to think about regulation first, and it's essential to actually do business here, not only from a regulatory point of view, but also being a trusted financial service provider. And that's why I'm also very happy to be on the stage here.
Catherine.
Hi, I'm Catherine Wise. I'm the co-founder of Remit. Remit is an online remittance business. What remittance is about helping migrants send money back home, and so we send from about 50 countries to 140 destinations. And what we've done differently is bring the business online, which was a very traditional business. And we also looked at disrupting the receive side by, sending to mobile wallet, for example, in Africa. Why the UK? Well, actually, that was quite a fairly easy, because we were based in the UK, so it was obviously. And I think also the UK market is a lot more, easier to kind of manage and to set up than maybe some other European countries.
Thanks, Charlene.
Hi everyone, my name is Charlene Chen. I'm the Chief Operating Officer of Bitpesa. Apologies for my voice. I seem to acquire that cold that is going around London. So Bitpesa is a Pan-African FX payments platform, and we essentially serve African businesses that need to get money out of Africa or within Africa. And we work with money transfer companies in the UK, across Europe and North America, that want to buy wholesale FX and get last mile distribution to mobile money wallets and bank accounts across Africa. We started the company in Nairobi about 4 years ago, where I lived for about 5 years. But we're also operational in Uganda, Tanzania, Nigeria, Senegal, and the DRC, and quickly expanding. It was very important for us to get a UK FCA license about 2 years ago, so that we could passport it to other jurisdictions, and also to enable a lot more credibility when applying for licensing and acquiring clients in Africa, where digital currency is not yet regulated.
So one of the reasons I was interested in the answers to your question about why the UK, and obviously if you're here, you don't have a choice. But in your case, Jens, and I guess in your case to a lesser extent, lending to businesses you could avoid regulation if you wanted to, if you narrowed your target market. And I guess that might have been an option for you as well. And a lot of time we spend is advising clients on how to launch business without being regulated. But from what you've said, actually having an FCA authorization is good for your reputation and building up trust in other people. What I wondered was whether you find when you broaden into another market, having an FCA authorization is also taken into account by regulators in other places. Have you found that, Jen?
Yeah, I mean, we have our first country was actually Spain, followed by Netherlands, and those countries are differently regulated as almost all countries where we're operating. So I think we have retained the FCA license relatively early, which helped us to also build our internal regulatory framework and set up in a way that whenever there's a change, whenever we enter into another jurisdiction, we can cope with that. There's certainly differences, and there are certain jurisdictions also in Europe which are so heavily unfairly regulated that you almost need to acquire a full banking license to actually do what we are doing, which is own balance sheet lending without taking deposits. And here, from my point of view, we have set an internal standard which helps us also to operate quite efficiently, because dealing with 5 different regulations and where we have operations in 5 countries is actually a fairly complex process. And that's also why we have from day one also hired in-house expertise, in-house legal counsel, compliance officer to cope with that, and also to set up our business model from product to distribution in a way that we don't have to always change it when we go into a new market, because that would not be scalable, especially when you want to launch a global company as we are.
Yeah.
Yeah.
Well, Catherine, do you find that, again, generalising somewhat, if when you enter another market, you are already complying with standards required by the FCA, you are likely to meet the requirements in that new market?
Yes, I think the UK has a good standing, and the Europe, especially in our sector, the payment services. We've had the European Directive 2009, which kind of clarified a lot of the way the payments were done. Which before, as you said, every country was so different that made it difficult. But then that simplified and made it easier to understand. But also gave us, there's a lot of kind of developing country, or even in the Far East, looking at the UK as a way, because it is a financial services country, looking at the UK as a leader, and therefore having a license and being regulated and knowing that you're doing well in that country is kind of helps you to kind of approach the regulator, and they do ask for reference. And for example, sandbox, there's a number of sandbox in the Far East, in Malaysia and Singapore, which are actually based on the UK FCA sandbox.
Yes. I think I'll come back to the sandboxes perhaps a bit later on. But Charlene, I mean, you're probably operating in a less developed area from a regulatory point of view. But do you nonetheless apply the sort of UK standard where no one's going to blame you for being super compliant, I think, is and the chances are that local regulation will catch up. Is that as a working hypothesis, is that sound, do you think?
Yeah, that's absolutely been our strategy. Because of our FCA authorized payments institution license, we already have to implement very stringent KYC, AML policies to be compliant with PSD, et cetera. And it's true, digital currency, as I alluded to before, is not yet regulated across the African countries where we operate, although we've made great headway with the Central Bank of Nigeria to draft digital currency policy there, which has not yet been gazetted. But yes, I think absolutely, we knew that a day would come when digital currency will be regulated, not just in Africa, but across the globe. And we wanted to make sure that we were ready and, kind of first in class, and first in line to be compliant when that day comes. And so that's absolutely been our strategy. And yes, regulation is slow to come, but we're ready.
Yeah, so I mean, what is clear from all of you is that I think the mistakes that some startups made maybe 10 years ago or more, which was to to grow at whatever cost and then sort out the regulation later, that business model is broke, isn't it? I mean, you've got to get the regulation right first, but how do you deal with that in terms of the cost? I mean, that is a huge startup cost, isn't it? Is there a ready solution to that, or do you think that RegTech is going to be, or already is, offering part of the answer to that?
Well, we're obviously, we're now 7 years old, so when we started, we had little resources, so we had to maybe look at the easier license to get, the cheaper, certainly Europe and some other countries like Canada, where there's more of a registration process and a full licensing. We started with that and left, for example, the US, where you have to get a license per state, and that's very complex and quite expensive, to where we had our first injection of capital to really there. So I think it's a question of focusing on what you can do, what's probably not easier, but a bit easiest, and do the more difficult country. Like, for example, now we're in Japan, but Japan is very difficult because it was the first country where also English was not a language, so we had to translate everything. It was much more difficult. So you try to obviously identify those countries and go one by one, and what's easier, and then as you grow and obviously you have more resources, then you can afford to go to those more difficult jurisdictions.
Sure. From our perspective, I'm not going to lie. The first year, as we were sort of testing out product market fit before investing in a lot of compliance staff or compliance systems, we did just more fly under the radar. And back then, we were doing retail remittances, Bitcoin into the system, and mobile money out, which was totally a product that didn't exist. And so there was really no framework to follow. But we kind of took what standard remittance, money transfer regulation demands. But yeah, I love what Catherine said about choosing jurisdictions where it's a little bit more flexible, or while you start to build those regulatory relationships and start to let regulators know what you're doing. I think when you're kind of small, like well, I can't speak for every jurisdiction, but like if you're not doing a lot of transaction volume, you're not attracting a lot of either positive or negative attention. But yeah, I mean, once you're doing millions of dollars per month, people will notice, and you have to be ready with either regulation if it exists, or reasons why you are abiding by compliance. I'm really excited about RegTech. I can't tell you how many times I would love to increase the operational efficiency of our KYC AML, but we suffer the challenge of there aren't, just like there aren't credit bureaus across Africa, there aren't like universal databases that check the validity of addresses or check identities. So I think, unfortunately for us, because we're working in very developing markets, we don't have access to a lot of the really hot, sexy RegTech tools that are available across the UK and the EU.
I
just wanted to add to a point that the RegTech, even when you have the tools, some of the regulators still don't accept them. And like Japan, for example, we are struggling to get them to adopt, some of those technology. And it's, a bit of a dichotomy. Japan being one of the high-tech country, but when it comes to regulation, they're very, very traditional.
That's true. But also to your point on the costs, I think that's something essential, because you can easily spend a couple of $100,000 in your first years, where you might have only 1 or 2 million max of funding. So as I said, one of the pretty top first 5 hires was a legal counsel, who was then able not only to do all the basic work to help also to shape the operation model, which was quite established after 6 months and still is more or less the same as it is today, and then dealing with those third-party law firms for respective markets, where you obviously can't process all that knowledge, but it helps you also to gain knowledge, to also control the process and the time. I mean, we have received the FCA license within like 4 months, but well before we actually very concretely entered the UK, because you never know how long it takes. Yeah, maybe building up the platform takes 2 months, but for whatever reason it can take 1 year to get the license. So managing the process, the time, but also the costs in the end, and building up knowledge, especially if you want to go for further countries, is just essential. I can just give everyone the advice to rather spend that money up front in building that knowledge in-house.
I mean, it is extraordinary, even across Europe, where we're meant to have the same laws, but basically how differently they are interpreted in various places. And as an aside, what we've found as a law firm, that when we're doing the sort of regulatory review that you guys need if you're moving into a new market, we've learnt that the most efficient way of doing it is to send the questions and the answers. So we send the answers all based on what the position would be in English law, and we ask the law firm only to change it to the extent that it's necessary, because otherwise you get such a range of things that are coming back, it's very, very hard to sort of work out what the position is. But going back to regulators, actually more sort of pre-passporting, an era that we're about to return to, there was, and to a certain extent still, there was this concept of forum shopping, that you would launch your business in a forum which had the best regulatory sort of environment for you. I get the sense that there is competition amongst regulators these days to attract people into their jurisdictions. And again, I wondered if you had any experience of that, and whether you think regulators are totally open with what they can offer. I think, was it in Malaysia that you've had some experience?
Yes,
I think.
well, obviously we were approved for the sandbox, in Malaysia. So it's the first time that they allow an online remittance company, because for the moment you have to do a KYC. If you're licensed, you have a face-to-face KYC. So we are the precursor of online verification, KYC verification, and I think that's Malaysia is realizing that they saw Singapore doing it, so they had to kind of follow suit, and also seeing that the tech world is moving everywhere. So again, to make sure that they stay at the top. So there's a political will there to move and to progress.
Have you?
Yeah, I mean, we get approached, by certain countries or representatives from the Middle East, also from Southeast Asia, from Singapore, where there's this sandbox deal also with the UK on regulatory similarities and adjustments, and that's obviously beneficial also for us to know. I mean, regulation is always one out of three top criteria when we discuss where to go next, and a certain harmonization of regulation, especially when we already have that FCA standard internally, is always very beneficial for us, and it helps us to also reduce uncertainty about what's still to come. And I think it's very good for them to actually create those sandboxes and be a bit flexible, but they also shouldn't overpromise. Sometimes I also sometimes have the feeling that they also need to acquire certain expertise first, and also need to communicate very clearly actually how the details will look like, which is sometimes not 100% clear, which is essential in the end for us, obviously.
What's the experience in Africa? I mean, I know you work very closely with governments and so on, but how does that sort of work and help your business?
I think what we've found in our African markets is that we've had to be more proactive and sort of, I think they have a lot of challenges to deal with that are kind of pre-innovation. So for example, the Central Bank of Kenya had to deal with the fact that 3 of their banks went under receivership in the same year. So, they're not so much thinking about innovation as just standardizing and stabilizing an unstable financial system. But I will also say that the Capital Markets Authority of Kenya recently hosted this great forum to create a regulatory FinTech sandbox, modeled after the FCA's sandbox. So we found that to be quite interesting, and we were invited to speak and keynote there. And I found that to be a really engaging discussion, and I think it's likely that the Capital Markets Authority of Kenya will implement a sandbox. As I said,
without wanting to be sort of, I think it might sound rude, but it's not meant to be. But it always struck me that in places like some jurisdictions where the regulatory framework is not very developed. Actually, China is probably the best example, but Africa may be slightly true of as well. That in a sense, the whole continent is a sandbox. So the idea of having a sort of a regulator having a sandbox in a place which is sort of a big sandbox, is that a fair comment, or is that?
No, it's true. I'm laughing because it does feel like a giant sandbox. But I guess a sandbox, and well, I'd say it goes two ways. You're neither protected by the sandbox, but if you play carefully enough in the sandbox, no one will bother you either. So I think because there is so much room for innovation, and there is a lot of leapfrogging technology such as mobile money, which took 7 years to get regulated in Kenya. There has been instances where there have been companies, I'd say more larger companies than startups, that are allowed to play, and then a sandbox or a regulation is built around that proven innovation. I think M-Pesa is the classic example of that. But yeah, in many ways, I think I love what Emily said. Is when we approached the Central Bank of Nigeria, we didn't say, hey, let's help you figure out how to regulate this. We drafted a policy and we said, this is what we recommend, and this is based on what everyone around the world is doing. Like we quoted from what digital currency regulation is happening in Asia, in the US, even here in the UK. The Bank of England has also been looking very closely at this and seeking thought leadership. So I think the best approach for us was to basically bring something and say, how does this sound to you? As opposed to being like, hey, we want to be regulated. You figure out how to regulate us. So you got to do the work yourself.
Like the support, I think is in places like Africa, it's very important to engage with the regulators and to have a discussion, because I said it is sometimes developing mobile money was a new product for a lot of countries, and therefore they have not actually looked, and it was small at first, so they didn't consider it, but now that they realize how the increase and the volumes, and therefore they need to understand how it works and what's the difference between a normal different product. So engaging with the regulators is very important.
It doesn't really work in Germany, does it? That's, as you said, you're headquartered in Berlin, but you're not actually operating there. I gather that's partly to do with the regulation.
Yeah, to a certain extent. Yeah, Germany is obviously a very special market within Europe. It's quite overbanked also, apart from the regulatory setup. But in the end, in case if you want to be an own balance sheet lender without taking deposits, you're still basically required to almost have the full banking license like a traditional bank, so to say, which is not per se impossible. It just is an additional layer of complexity, which is always a trade-off, especially in the earlier years, where to focus on. And there are enough other markets, particularly also in the UK, where we believe regulation is more fair, and that's also why we like being in the UK, for instance, and other markets.
Yeah. And I think the other huge, you've mentioned the US already, but I know our colleagues in Washington and New York tear their hair basically, because as soon as a client approaches them about launching or expanding a business from, say, the UK, then the ton of regulation, federal and state, becomes a fantastic issue. But I think I'm totally confused about time. I think we've got 4 questions, or 5? Okay. Obviously, you've all had experience of scaling up outside one jurisdiction. I remember years ago working with a startup, this was before FinTech became FinTech, and being told that the key to all our advice was that we should assume that this business wanted to expand overseas, so we should be as agnostic as possible from a sort of legal point of view. But what would your advice be to anyone in this room who's looking at new markets about the one thing that maybe you didn't do that you wish you had done right off? I know he's ready to go with that.
Well, I think it's planning and and as I say, prioritizing, because normally you don't have that many resources, especially when you're smaller. So it's looking at don't forget there's a pool of people you have in your sector or in different sector who have a knowledge or have experience or some experience. So you need to, and that's why network is important. So you ask their experience, how did they approach it? Who do they use as a kind of advisors, and so you can then help you to make those decisions, especially when you're small and you can't afford maybe kind of expensive advisors. So very much using your network is very important.
Yeah. Mm-hmm. Any learnings?
Yeah, I mean, definitely planning ahead, not knowing about the next country, but maybe the next 2 to 3 countries. And obviously, because of the different frameworks, I think there are still certain sub-areas where the regulation is still quite harmonized. So I think it's always important to say, okay, which set of jurisdiction might be more interesting, and then have a setup which is efficiently enough to ensure that you're successful and not trying to tweak your model just because you like a country and and then you basically have a different product almost. So focus on what you want to deliver to your clients, and then find the right environment, and then you execute.
So I think you said right at the outset that when you're thinking about new markets, regulation is sort of one of the top 3 considerations that you take into account. How about you, Charlene?
Yeah, absolutely.
Anything you did that you regret or didn't do?
Not so much that I regret, but yeah, I really agree with both Jens and Catherine. I think from Jens' perspective, when you're going through new market strategy and analyzing, there's 50 plus countries in Africa. We could go in any number one of them. And I always look at it as a supply and demand side. So a market might look very attractive from a demand side, but like horrifically. So let me just take Angola as an example. Huge FX problems, huge need to get money in and out of that country. So demand, very high. Supply side, the ability to actually operate in Angola, be regulated or not regulated, just to do business, very difficult. So, not just focusing on the excitement of demand, but also looking at your capability and feasibility for actually implementing operations in that country, very important. And then I love what Catherine said about prioritization. We would all love to enter 20 new countries every year, but it's just not feasible. And when you're small and you're still raising money, you have to prove traction. And I found that investors really want to see that you can prove product market fit in at least your home market before you attempt to expand to 5 to 10 ones. And then the thing that I do wish we had done earlier is participate in some of the pro bono or discounted legal firm programs. Where I've seen some law firms actually offer ways to get discounted fees because they know that eventually your firm will be so successful and will grow and scale and have lots of revenue for legal fees. But I think for us, we pretty much just paid a lot of money to lawyers up front, which was a great investment, but it meant that we couldn't do other things.
You should have spoken to us. You still can. So I think we've got time for questions. Yep. I think I'm going to look at this to. Yes. There's a question for you, Charlene. Sorry, if I put it here, it might look less strange. Charlene, are you lobbying the government to implement regulation primarily to create a barrier to entry for your competitors? That's a very good question.
For us, it's both. I think it's a approach to what I like to call CYA, if you know what that stands for. So covering our own abilities and not avoiding shutdown if, say Bitcoin or cryptocurrency is declared illegal in a jurisdiction. But yeah, absolutely. It's a barrier to entry. And, we plan to be the first to be regulated to do digital currency in Africa. And a lot of regulators do limit the first batch of licenses. So yes.
but maybe just one comment from my side. I think per se regulation is not about making things more difficult in general, right? It's also to set certain standards. We have seen some similar in a more developed market like in Australia, which is fairly less regulated than, for instance, the UK, where we, for instance, lobbying for a bit more transparency and consistency, which then also helps to actually ensure that the overall industry is successful, because if there are certain negative examples over time, that always destroys also confidence in the sector. So it's not always about creating barriers and being overly complicated and negative when it comes to regulation.
Yeah.
That's just a remark.
Do you see regulation as an opportunity then to keep people out of the market?
No, I think regulation is necessary. To be honest, in our sector, probably the banks are more of a problem than the actual regulators, because at least the regulator, the law is there. You can look at their website, you can see exactly what you need, and if you meet, there is no reason why they should refuse. But getting a bank account in some jurisdiction is practically impossible in our business, because we are, we're seen as a risky business, and therefore banks are not prepared to open bank accounts. So we're lucky because we are got to a certain size, we've got very high compliance systems, so we've been able to maintain and open bank accounts. But I would think if we started today, I don't think we would be as successful as we did when we did in 2010. Yeah.
Mm-hmm. So I don't know who sent that question. It's a great question, but and it does resonate with me, because I have spoken to someone in the peer-to-peer lending area who, first of all, they lobbied to be regulated, and then they complained about it, and then they woke up to the fact that actually it was keeping so many people out of the market that they probably got where they wanted to be. So one final question. I think and short answers, please. We've got 2 minutes. Another great question. What are the opportunities and risks of buying a regulated company in another country as a tactic? Have any of you considered that?
Well, we have looked, but we wouldn't buy as our first choice. We would not buy a regulated business, because you never know quite what you're buying. There's always a risk. So probably buying the customers, but not buying the company itself. I think we're probably we're fairly risk averse from that point of view, and so probably especially in our business, it's quite high risk, and therefore we probably avoid that.
Mm-hmm. For us, we're not quite at the size where we're really thinking about a lot of acquisitions, but I think for us, we'd be more likely to acquire a company for its payout infrastructure, so its connections to mobile money or bank accounts, rather than trying to buy the license. So in terms of the build-buy partner strategy, we would build our own regulation.
Yeah. And you, James?
Yeah, for us, I mean, in the countries where we operate, it's not an option. It might always be a potential way of expanding to new countries. If you go for someone who has maybe partnered with a bank, for instance, where you assume there is a signal of not only trust but the proof, basically. But agree also, it's a bit too early in our stage. We have enough growth potential.
Okay, well, I think we're up with time. Please join me in thanking all the panelists. Thank you very much indeed.